Welcome, ladies and gentlemen, to Stock Talk on December 9th. So, some quick housekeeping. Just note that if you join the course, make sure to join the Discord group as well, because we are talking about the markets every day and specific tickers that we're watching. So, there are some of you, I think, who join the course, which is great, and it provides a plethora of educational material, but at the same time, you're missing a big portion if you're not in the Discord chat. So feel free to join. We have a lot of members talking in the Discord chat. I'm actively talking in there daily. So love to see you all there. So let's talk about SPY, S&P 500 yearly chart. And the reason why we talk about this is because markets are volatile. It moves $7 higher one day, $7 lower another day. So in this really volatile environment, the one thing that you could do, one is day trade, right? That's certainly one possibility. Or the second is be patient. So whichever one that you want to do, it's up to you. But there are two various strategies that could work if implemented properly when you're looking at the charts. So the deal with this is, recall on Thursday's video, I talked about how the S&P 500 moved higher, right? And at the time, here was the green candle that was made, right? Off of the support of 263, and it pulled up. Now, I told people that it was a nice move, but the theme for the week prior was what? It was continuation. So if this was indeed the support, we want to see continuation in the next few days. So the thing about this is, and I told people, back over here, right, when we were climbing, that, we will eventually come back and test 263, 262, 264 area. So don't chase it unless you're day trading in and out of it. So what you can see here is that we immediately got rejected, and you can see that the candle size pretty much negated the green candle from the day prior. So the thing about this is, you can imagine there's two trains of thought here, right? One train of thought is we're at the support and we should be bouncing off of this area. I think that is valid, but at the same time, you have to look at both short-term momentum and long-term momentum, right? And these are concepts that are discussed in much greater detail in much more different time frames on various charts in the course. So be sure to check out that course if you haven't already, because it teaches you everything that you need to know in terms of how to analyze the charts. What's the short-term momentum if you're just looking at the yearly chart here? It is to the downside. You can see that this is a bear flag pattern. It's playing out to the downside, and the near-term momentum's to the downside. So I'm favoring, while we could bounce off of this area, let's say tomorrow, we certainly don't have to, but we could, and let's say we go up 2% tomorrow, but are we out of the woods yet? No, we're not. We're not going to be out of the woods until we see continuation to the upside. So right now you can see that we're holding support. That's positive, but at the same time, this is a bear flag pattern. If it does play out, I do not expect 260 to hold. We've already tested 260 once. Everyone's watching 260, and at that point, I would really look for the floodgates to open to the downside. And my target in that case, in this red box, been here forever, is 250. That's around the 250 range. You can see it's a range. The reason is, when it comes down, and when it comes down really quickly, we don't know precisely to the dollar. No one knows precisely to the dollar where we're going to bounce, right? You might get lucky 1 out of 10 times, 1 out of 20 times to guessing at the dollar, but no one knows. But there's the range I'm looking for should we go lower. Now, in the near term, can we bounce a little bit higher? Yes, before collapsing. Yes, that would be a continuation of the bear flag pattern. But just note that I know some people are also talking about the potential for it to go to 280 to 281. I'm not dismissing that fact. Of course, I recognize that could be a possibility, but the probability of it going lower is slightly higher, in my opinion, than the probability that we will retest 280 to 281. Of course, if we do see that continuation, if we get over the 20-period moving average, we do see continuation in the next few days, then sure, I will support the fact that 280, 281 might be a likely target. But for now, the momentum is being pushed lower, and one thing that doesn't really fit, in my opinion, is look how quickly we dropped. 1, 2, 3, 4 days it took us to drop, and then 1, 2, 3, 4, around 6 days it took us to move higher. Isn't that a little bit concerning? It's just a little bit more concerning in the time frame that we have dropped so quickly. So just be cautious. That's moving forward. TVIX yearly chart. Now remember, with TVIX or volatility, we talked about the 200-period moving average acting as a resistance. So this time around, this should act as a resistance. However, you can see how volatility held up very well on Friday, right? Even though, what was the S&P 500 doing? It was at a support, right? So what you can see is this is wanting to push higher. So any break of that support below 263 will really push this one and escalate this one over the 200-period resistance and look for this to push significantly higher. And those numbers that are valid, $60, $70, $80, will all come into equation by then. So don't be too surprised if really the floodgates open to the downside. Crude oil futures. So crude oil futures, remember this chart, we talked about the yearly chart, how it doesn't really matter what news comes out. It comes out and it gets rejected the 20-period moving average. What does that mean? That means that it's likely to push lower. Now, for a crude oil bull, you would want to see a rebound, a push higher at some point right now. But that is really more speculation. We've already had the bounce. We're still getting rejected off the 20-period moving average, but we are nearing support levels. So what can you do with crude oil chart? Ask yourself, what can you do with the crude oil chart? What can you do? Yeah, that's a good question, right? So, we'll have to let this trend play out. And sometimes with these kind of trends, you can't do much with these charts, right? We're nearing support, yet we're getting rejected, so we're getting squeezed in. No need to take that chance. Natural gas. So let's take a look at natural gas. And so natural gas on the yearly chart looks, what do you see? Doesn't this look pretty bullish, right? What is it doing? Consolidating sideways for that next push higher. So don't be surprised if this does push higher. It's been maintaining support levels above the 20 for a while, so I wouldn't be surprised if this does push higher. To where? So my next resistance line is around 5.70, 5.80, around that vicinity. That's where I would be looking for natural gas resistance. Now, Forward/GC gold futures. Gold futures all of a sudden look much better, actually. You can see that we've talked about how gold was bullish, but the thing is, we didn't know when it was going to push higher. And of course, I remember talking about gold futures last week, and I said it could be until next year we push over the resistance of 1242. And what happened? Of course, right after I said it, a couple of days after I said it, it managed to push over the resistance, and this was the push over the resistance on this day. Here, we still stayed over the resistance, and now we have a definitive push to the upside. So, regardless, we were bullish gold, right? That was for certain. But what wasn't certain was when it was going to push higher. But you can see if you did trade the futures, this was a nice push and a much needed push for gold, in my opinion. So next resistance is going to be around 1260 and then if we push over that, 1266. So that will be the next gold test moving on forward. So I'm going to read some of your comments. So all of you know that we have a course, right? This was really developed because I personally wanted to teach everything I know and all the mistakes I've learned from the past. I made a lot. I mean, no one, in my opinion, makes no mistakes going to the market and just becomes successful. I made a lot of mistakes, and I teach you the mistakes I've made and how to analyze the chart so that you won't make the same mistakes, right? Or you minimize the probability that you make mistakes. So check out the course. You can also post comments on the YouTube chat, of course, under the videos. And then you can also look at the Facebook group. So the Facebook group, Sometimes I post what the group is doing. Sometimes I post when the videos are released. So check out the Facebook group. I think it's very useful there too. And you can actually, if you didn't know about that, you can actually message me if you have any questions or such on the Facebook chat. So keep that in mind. And that's all in the description box under the YouTube, so you can check that out. So I want to take a look at some of the comments made on the last video, starting with 7-day options. You said it's really comprehensive video, but your opinion is that SPY will reach 281 by Wednesday of next week and break through. But you were right about the drop back down to the retest yesterday's low. So, so here, that's I think that's valid if we see some signs of starting tomorrow. That could be a valid theory if we hold support and we see signs tomorrow and Tuesday if we can push above. So I'm watching that area, 280 to 281, break over. That will take a lot of effort. Let me just tell you, that will take a lot of effort by the markets due to how fast we came down. Okay. Usually we go slower to the upside than to the downside. So that's what we have right now. And thank you for your comment. Keep that coming. Love the different perspectives. Rizwan, please break down BAC, Kevin. So BAC, isn't that Bank of America again? Or is that? Oh, okay. So Bank of America, I've talked about this in the past, and you can see financials really took a hit on Friday with the rest of the market. So Bank of America right now is pretty bearish, right? Where can we find support levels? I think the near-term support level could be around 24.44, followed by a pretty strong support around 23. Regardless, that 23 to $24 mark is where I would look for support. We're nearing that area, but we're still $1 or so away. But in the near term, this is playing to the downside. What you can see is here is the down move, followed by a consolidation, bearish move. Here's the down move. We can make a consolidation before another down move, right? This is a bear flag pattern, so this is bearish. But in the long term, this is likely to push higher, right? And we're talking about months on a monthly time frame, long-term time frame. This is likely to push higher, but in the near term, this is pushing lower. So be careful if you're long on this one, because this could decline a little bit more before we actually recover. Okay, Ben. Okay, thank you for your comment, Ben. Yeah, I think I talked about what I'm looking for in terms of market movement on the S&P 500. So hopefully that helps. Space Ghost, crazy Kramer markets. Yeah, I don't know if it was Kramer who, I think Kramer is kind of just talking about what's been happening, but not really like looking forward. Seeing Xanthartist. So, and herein lies the fact. What I see Xanthartist. And then I see 7-day options giving a totally different opinion, right? I think Xanthartist, you've been really pounding the table on the fact that we will be dropping below support and we will have a massive flush back to the downside. And I think that is more likely. But at the same time, 7-day options, you can see that we could be moving higher because we're at a support. Love that. Keep it coming. And, this is why we really have to monitor futures tonight as we go in forward. So, Yarvin, McCombs, Gerp, Joe, Paul, thank you everyone for commenting. We'll tackle the last ticker from McCombs, which is Lululemon. And so the thing about Lululemon was you can see that really nothing is immune to the markets, right? What has gone up significantly in the past is the market does not care. It will pull the stock down regardless of revenue growth exceeding expectations, positive outlook. It doesn't matter. Market will sell off on the news if it's priced in not correctly or whatever, if there's any sort of neutral news. So and what are they doing? They're really readjusting their earnings estimates, in my opinion, for next year. So just be careful. And here's Lulu right here, moving lower. And what can you do with this chart? I think you can, if you were brave, you would take a short-term bounce but this is, in my opinion, very short term if this were to bounce higher. A short-term bounce back to the upside, but long-term, there's no consolidation. Look for this to move lower. And what's really kind of scary about this is look how fast Lululemon has moved higher. And because of its quickness that it's moved higher, there's little support that we can see on the chart. Isn't that a little worrisome? I would be a little worrisome if you were long Lulu. So, and now that we've broken below the 200, I mean, the floodgates for this one's already opening. And people want to escape this one. So, you know, even I think a short-term bounce is very risky at this point. In some cases, you can take a short-term bounce after a major sell-off, but for this one, here you can see it's sold off of earnings. I would really have to wait, let's say, 2 days minimum to play a very short-term 2-day swing trade possibly. That's what I would do, but, you know, that's me. Okay, everyone, thank you so much for watching this video. Hopefully you are having an enjoyable weekend, and we will be back in action both on the Discord group chat and Stock Talks for everyone. Oh, also note that we have really members Stock Talks posted pretty much every single, oh, not every single day, but definitely every week. There's member Stock Talks that are posted. So sometimes if there's no public Stock Talk, there are member Stock Talk that are posted that go into much more in-depth detail on market trends. And the reason for that is I teach the material in the course, and the course really opens up in which I can open up to the members and tell them everything that I'm looking at on various charts, not just the S&P 500, not just various commodities or individual stocks. So thank you everyone for watching. Happy trading. Be quick or be patient, and I will see you all soon.